let me tell you a bit about Africa iShare. So Africa iShare is a forum that we started with the idea of having many people from different African countries speaking and interacting with each other on an ongoing basis. And the aim is to get people who are like-minded within different African countries engaging and speaking to each other and learning from each other. So really the idea is to have as many people from different African countries together and sharing ideas and hearing from one another and networking and getting to know each other. That's the idea of Africa iShare. We've had different interactions already where we just have these kinds of forums. In the last week, we had a discussion about technopreneurship in Africa, and we basically had someone from Kenya and someone from Nigeria speak about the different kinds of technology businesses that they are running in each of their countries. And there was just an exchange of comparing between the Kenyan technology market and the Nigerian market, and then there was just a bit of engagement on that and some questions on that. So in the coming week, we will also be doing a discussion possibly about China-Africa relations and have people from different countries speaking about it. So basically that's the idea of Africa iShare, and there will be ongoing discussions, and we post and let everyone know what is happening in advance so that if it's a topic that interests you, for you to be able to join it. For today, the discussion is on tax, and it's about how effective the tax measures that have been passed by different African countries are in dealing with COVID-19. And the thing also to say is that in this round, we'll be speaking about Kenya and Zambia and Liberia. In the coming weeks, we will have Tanzania, Uganda, and Ghana. So just to get people from each of those countries speaking and just giving ideas and their perspectives on what's happening in their countries. So that said, I will just go and have Mukaya introduce yourself to everyone.
Good evening, everyone. My name is Mukaya Karaya. I work with SKM Africa as a partner in charge of tax and business advisory. Thanks, Christine, and thanks for everyone who has joined the call. Kudos to Christine and like-minded people who came up with this idea. I think it's a very timely idea, and perhaps with the integration of Africa around the corner, I think it's high time we start consolidating our ideas and minds so that we have something that can work for everyone.
Awesome. Thanks, Mukaya. And Darlington, if you could introduce yourself.
Darlington Talere. I work at the Liberia Revenue Authority as the Commissioner for Taxes. And let's quickly join our colleagues and say thank you for this platform and the topic under discussion that will bring like minds together to discuss the issues on the African continent and how best together we can proffer some solutions. Thank you from our end here in Liberia.
Awesome. Thanks, Darlington. Kate, if you could introduce yourself. Doesn't sound like Kate can hear us. She's from Zambia. She will be joining in and speaking about the different measures that Zambia has taken to deal with COVID-19. If I could go with Mukaya and get started for us with Kenya, you could basically just start off by speaking about corporate tax and employee tax. Then we will go to Liberia and then listen to Darlington speak about that. Hopefully by then Kate will have come back on the call. Then we can look at the other tax measures that have been taken in both Kenya and Liberia.
Thanks, Kristen, for that. I think just like it is across the world, Kenya is among the countries that have been worst hit by COVID-19. Of course, being a developing country and of course a country that is largely dependent on a large number of inputs from other countries to even partake our manufacturing, we have indeed been hit. Locally, Kenya we largely depend on agriculture, which contributes around 30% or so to the GDP. And this has also been quite affected because of the distorted supply chain in this sector. Around March, the government did come out to try and put up measures that try to mitigate the effects of COVID-19. And the measures did cut across a couple of spheres. Some of them were fiscal in nature, which effectively means they did affect the tax space. So from a corporation tax perspective, the measures that were brought about did include turnover tax. So turnover tax is a tax that basically targets macro, small, and medium enterprises whose turnover is between a million shillings and 50 million per annum. Initially, the tax rate for the same was 3%, which was to be applied on a monthly basis for the sake of accountability. So what the government has done is it reviewed that tax rate downwards from 3% to 1%. And the whole essence was just to ensure that SMEs, or how we call them MSMEs, have enough revenue to try and see them through this period. Whether the impact has been felt, I think we'll have a discussion on that a bit later. There was also another measure which was put up by the government. That is the reduction of the corporate tax rates for companies. So prior to April 2020, the corporation tax rate was 30%. The same has been reduced downwards to 25%. Although this does not apply to the 2019 financial periods and periods prior to 2020, the whole idea is going forward, companies will apply a lower tax rate on their profits and therefore will remain more liquid. Then there's also another amendment, another measure which the government has taken up. This is a revision of the lowest band for monthly rental income tax. And this is tax applicable to people who have a rental income from property which are of residential nature. So what has happened here is the government has increased the threshold, the lower threshold, from 144,000 Kenya shillings to 288,000 Kenya shillings. And it has also increased the upper threshold from 10 million Kenya shillings to 15 million Kenya shillings. So the impact of this is now more people will fall into this category whose tax rate is 10% per annum. The impact of all this is just trying to ensure that more people get to pay tax at slightly reduced rates and therefore have more money in their pocket. From an employee tax perspective, of course, what we have seen in the country is a couple of companies have sent their employees either on unpaid leave or declared their positions redundant. And so many other companies which have not gone with that option have subjected their employees to salary cut. And the effect of this basically is having a population that has a reduced purchasing power. So what the government has done to try and mitigate some of these challenges is the pay-as-you-earn rate. The highest band is subject to normally 30% pay-as-you-earn rate has been revised downwards to 25%. And this effectively means that if you are within the highest band of pay-as-you-earn, now your income is going to be subject to tax at 25% as opposed to 30%. Number two, what the government has done is it has increased personal relief from around 14,000 thereabouts per month to 2,400 Kenya shillings per month. This now means that anyone who is earning 24,000 or less will not be subject to pay-as-you-earn at all. Therefore, they will be taking home the entire 24,000. The beauty of pay-as-you-earn, it has a direct impact on putting more money into Kenyans' pockets. The only challenge with this, as we shall have a discussion later, is with people losing jobs, with people being declared redundant, whether this measure has been very successful in trying to mitigate the situation.
Okay, that's very helpful. That's such a good summary, Mokaya, on the tax measures. We will come back to hear a bit more, especially on what you said about, corporate tax that do not apply to the year before 2020. And really, that is very helpful. And even the employee taxes, the benefit that they're getting. When you get a pay cut from your employer and then there's a tax benefit, we will discuss a bit more about that. But if I may go to Darlington, what tax measures have been passed in Liberia? And you can also compare them to Kenya on corporate tax and employee tax.
Well, thank you. All of the measures discussed by my colleague in Kenya, the government of Liberia actually did not do none of them. There was no reduction in the rate of tax. What the government did, along with its development partners, especially the IMF, was to recast the budget. So the initial fiscal budget for the country was around 525 million. Normally, we do a mid-year review of the budget performance to consider whether there should be an increase in the forecast or an adjustment downward. So by December of 2019, and that was not during the heat of of the pandemic, the budget was recast from 525 million to around 505 million. Considering that the health of the economy wasn't that good. Our balance of payment, balance of trade they were all performing badly. Our exchange rate against the US dollar was around 29%. So there was huge economic pressure. So the government made a decision through the office of the president, and then that was legislated to adjust the budget downward. So when COVID hit, when the pandemic hit, that was around somewhere March, the government decided again to reduce the budget by 14%. So it got reduced by 14% to kind of take into consideration the fact that the president declared a state of emergency, and then there was a lockdown, and all non-essential businesses were instructed not to open their doors for the period of 3 months. Mm-hmm. So to cushion that effect, the budget was adjusted further by 14%. So what the tax authority did is, because the government chose not to reduce none of its tax rates, and because we don't have a lot of aids coming into direct budgetary support. Mm-hmm. Most of the aids that come to budgetary support. So to carry on a social program, the government decided to say, hey, the revenue authority can relax some of its measures. So in terms of the due dates for tax payments, those ones were extended for 2 months. We also relaxed the imposition of penalties and interest. And then what we also did, we automated our tax clearance certificate process. Mm-hmm. Tax clearance certificate is a major vehicle to obtain contracts here in Liberia, to obtain payments for contracts or to do any major business. So once that process was automated during the heat of the state of emergency, we saw a slight surge in the revenue numbers. Luckily for us, most of the businesses, whether it was especially in the private sector, did not lay off employees, even though they told them not to go to work, but they continued to pay them. And then the PAYE was paid. Here in Liberia, the government is the largest employer, and then PAYE from government is a big chunk of our domestic revenue. So the adjusted numbers of 14% outperformed that percentage by some 15%. So instead of the reduction of 14% in PAYE, we actually collected beyond that reduction by about 15%. So we saw a slight performance simply because we fully automated all of our processes, that taxpayers had the opportunity to pay directly the tax online, file the tax return online, apply and receive the tax clearance certificates online. All of our call centers were fully operational to ensure that we gave on-time responses to our taxpayers. So as a result, we saw a slight performance. Then the recast budget that was done by the government. So to conclude in this part of the discussion, no, we did not reduce tax rate, but we kind of relaxed most of those measures that are by law taxpayers should oblige to. So filing on-time filing were extended, penalties and interest were removed from outstanding tax liabilities. Yeah, so revenue slightly performed than anticipated.
A different approach altogether from what Kenya has taken. We will come back, Darlington, to ask a bit more like how effective those measures have been.
I'm happy to share about Zambia, and at the outset, would like to say that tax relief measures that were given in Zambia were essentially part of wider fiscal measures for the economy and to try and sustain businesses. Our initial measure that was announced was essentially a waiver of tax penalties and interest on outstanding tax liabilities that had been accrued from the period of this April up to September. But obviously, this waiver, and which can loosely be referred to as a COVID amnesty, had certain conditions. So, for instance, it would not apply to people who had disputes that were under consideration with the Revenue Authority, and that is also to active cases that had not yet been considered through the courts. Also doesn't apply to penalties and interests that arise from an audit, and if they arise from a judgment of the court. So the only benefit a business would have, again, here is trying to take advantage of the waiver of tax, penalties, and interest if you qualify under the guidelines. With VAT, in addition to the waiver of the penalties and interest, there's been some traction. And essentially, earlier this year, we had a restriction on the goods that businesses could claim VAT, input VAT on. And because of the COVID pandemic, we've now seen a relaxation to try and offer some cash flow relief to businesses. Some of the goods that are now enjoying this benefit are issues such as imported spare parts, lubricants, and stationery, which, depending on the business you're in, could go a long way to assist you. From the customs end, we've seen a couple of changes. Apart from the tax penalties and interests amnesty, we've seen a suspension of customs duties, as well as VAT on medical supplies. This is mainly to assist with the COVID-19 pandemic. We've also seen a suspension of duties on the importation of concentrates in the mining sector. And we've seen a government gazette issued listing what kind of supplies would qualify. We've also seen a suspension of duties on concentrates, which are relevant for the mining sector, and a suspension of export duty on precious metals and crocodile skin. So if you are working in a sector that can benefit from these suspensions, is quite useful. We have not seen any specific measures catering to the SMEs, and we also haven't seen anything specific in terms of employee taxes. But I'd also just like to mention that a number of these measures were put in place around April, which is about 3 months ago, and our numbers in terms of COVID cases were quite low, fairly decent. And what we're seeing now is a rise in numbers. So we might see additional changes and measures. And some of these measures were for a limited period, some of them 6 months, which means in September, they would automatically be revoked. And some of them go up to December. So we're also hoping we see some extensions. In terms of what we'd like to see, personally, I would like to see some measures targeting the SME sector, also sectors such as tourism, which have been badly affected, and a reduction in corporate tax rate, I think, would be appreciated, although we know that the Zambian budget and government expenditure rely quite heavily on tax revenue. Thank you.
Thanks, Kate, for that. We will come back to hear a bit more and quite some interesting things you said, like the measures that have been taken, especially on like import duty and all that kind of thing, considering that there will not be much imports now that there is not too much international trade going on. And anyway, we'll just come back and hear a bit more, and also about like a 6-month suspension, and it's likely that you'll be reverting back to the old tax rates, which now comes into question how much benefit will a company have gotten or a business have gotten. But we'll come back. If I may go back to Mokaya, you had started explaining about the VAT situation and the changes that have been passed in Kenya. And also, if you could also mention any other interesting tax measures that have been passed in Kenya on customs and in anything else.
Thanks, Christine, and thanks, Kate. I mean, it's interesting to hear the approach the country has taken to mitigate the effects of COVID to its citizens. So from a Kenyan perspective, Christine, and on VAT in particular, what the government has done has, of course, there's a reduction of the rate was reduced with effect from 1st of April from 16% to 14%. So there was a 2% relief. And as I mentioned earlier, VAT, of course, being a consumption tax, it has a direct impact on households because more often than not, households are the final consumers. So the burden of VAT is shouldered or taken care of by households. And with, of course, the purchasing power either cut completely for those who have lost their jobs or reduced purchasing power for those who have had salary cuts, then VAT really more or less worsens the situation for most of the consumers. So this effect, of course, it's a welcome move. Seen a couple of products which are deemed to be necessities, the price going down, though quite marginally. You can imagine what a 2% is, but at least there was some action in that perspective. Then the other thing is we have seen a couple of items move from exemption to zero rating, especially maize flour, flour from cassava, which again, staple food in Kenya being ugali, it's gonna likely to make flour quite affordable or easily can be afforded by majority of Kenyans who consider it a stable food. So from that end, I think those are the two major ones. There are so many other negative measures which the government has taken on VAT. I think we should look at those ones at a later point. From a customs perspective, what the government has done as an immediate measure to try and mitigate the COVID situation is there has been more items have been added to the East Africa remission scheme, duty remission scheme. What we have seen is, for instance, items that are considered necessities to manage the COVID-19 situation. These are PPEs, that the personal protective equipment, raw materials used to manufacture PPEs, raw materials used to manufacture sanitizers, masks. All those have been provided with a duty remission, which means that at the point of importation of raw materials used to manufacture those items, they'll be exempt from duty. Any other measures the government has taken, tax or otherwise? What we have seen the government rolling out at the moment is a stimulus package to the economy, which is really geared to trying to put some money into the low cadre of the society, which then will enable them get purchasing power and therefore consume necessities. Early in March and April, the government was sending some small tokens, busing some monies to Kenyans, especially those Kenyans living in slums. I think it was 1,000 shillings per week or something like that. Post May, we have not seen that going on. Of course, we also did set up a fund which was a corporate fund where Kenyans of goodwill were required to contribute to the extent possible based on their capacity. And that as well is being used to distribute, is being used to buy necessities, food, and being distributed to Kenyans to enable them to have purchasing power. So I think in a nutshell, those are the key measures that have been taken by the country to try and manage the COVID-19 situation.
Okay, that's quite interesting. And I think there's an extent to which the measures taken by Kenya are relatable to Zambia, especially on like the customs. But it's quite interesting that there has been like a reduction in duty, especially on PPEs. And also the comment that you made about VAT, like it's in Kenya that it sounds like it's a unique approach that has been taken to have the rate of VAT reduced, even if it's by a small marginal rate of 2%. And then the thing that is unique in Liberia is that there was a relaxation almost of like the filing timelines for people who have tax obligations, so that there was a bit of relaxation on the penalties and interest. Also, which seems to be the case in Zambia, that there was a waiver of interest and penalties, which Katie said it's almost like an amnesty that has been given over this COVID period. So those are quite different strategies that the three different countries have taken. So if I may,
Christine, if I may just interject for a minute,
okay,
so that we cover it as we move on. Kenya also has introduced what we call a voluntary tax disclosure mechanism or program, but it takes a very different tangent from what Liberia has, or perhaps from what Zambia has. For this one is really not COVID related, in my view. It covers periods prior to 30th of July 2020. The effective date of amnesty is 1st of January 2021. And of course, the conditions or the pre-qualifications for you to be eligible for the amnesty is pretty similar to what Kate had provided for. You ought not to be currently under an investigation or under an audit. If neither do you need to have any intention of audit by the Revenue Authority. However, this is not really a measure that is targeted to, mitigate the effects of COVID-19, if you ask me. It's a measure which is targeted to try and bring on board more revenue, especially from 2021, considering the fact that the government is likely to collect very minimal tax revenues compared to periods prior to COVID. Kristen.
Okay, that's quite interesting. Sounds like even Kenya is taking measures that, like what you're saying, that are focused purely on COVID, but maybe like more long-term tax collection measures that they're taking with foresight on the coming days, which is quite interesting. If I may go back to Zambia, like Kate, you're saying, there's a few things maybe that could help us understand the economy of Zambia, why the approach has been taken as it has been in reducing things like imports of lubricants and on the mining sector. Is it because the mining sector is the strongest sector? Because you see in the case of Liberia, Darlington was saying that the government is the biggest employer, so you would understand why the PYE measures would be somewhat pro benefiting the government. But for Zambia, is it that the mining sector is the key sector?
The mining sector is a very important sector here, and it has been for a long time. We are currently in the process and have been for a while trying to diversify to focus on more sectors such as agriculture, but there's a bit more work to be done. What had happened is a while back, it was possible to import concentrates without a duty. But what has happened now is they're trying to provide this relief because there's some people who have smelters that made representations to the government that they have to import a certain kind of concentrate and make certain mixtures to be able to do the processing in country. So this is a specific concern that the government is trying to address. An important thing to note also is that the mining sector collectively does contribute a significant amount of revenue in terms of taxes. So it's an understandable move. With respect to the VAT input claims, this was a recent change as well. And there was a bit of an outcry from certain sectors because some of the items that were excluded were issues such as stationery, office repair and maintenance, cleaning services. We've also seen, I guess, the crocodile hides. That one's a bit of a unique one. I can't comment much, but yeah, it's an interesting one. It could be that these are high value products which could be able to generate income for people who are engaging in this sort of business, and the government is particularly trying to encourage this sector.
Okay.
Yeah.
Okay, that's quite interesting. For like most countries, maybe would be trying to preserve their wildlife, but that's quite interesting. A measure that Zambia is taking. But if I may go back to Liberia, Darlington, if you could, like maybe possibly comment on what's the VAT or goods and services tax regime like in Liberia? Is it in any way a sort of way you can relate to what Mokaya is saying and what Kate is saying, especially on either reducing the amount of VAT to help give maybe greater purchasing power, or to allow claim of input and output VAT, which is also meant to help relieve on the VAT effect to a business. Is that in any kind of way something that you could relate to from Liberia? You could also comment on customs and any imports, such kinds of things that might affect.
So, Liberia currently does not have a VAT regime. We still do operate a goods and service tax or sales tax regime. And like I previously indicated, there was not a reduction in any of our tax rates, but there was a reduction in tax revenue from indirect taxes, particularly GST. We saw a little surge in tax revenue from the service sector, particularly telecommunications, because everyone was locked in. Everyone used a lot of data. So as a result, we saw a growth in service tax revenue from the telecommunications sector. For our customs end, again, there was not a reduction in customs duty, but there were measures put in place to relax some of the customs rules. So right now, we are not doing destination inspection. We are doing pre-inspection, and pre-inspections are paid for by importers.
Okay.
Some of those measures, because You are penalized if you don't do pre-shipment inspection and you come and do destination inspection. So some of these measures were relaxed. When you don't, and during the course of the pandemic, if you don't do pre-shipment inspection, the penal actions were relaxed concerning destination inspection.
Okay.
But duty rates were not relaxed on any imported goods.
Okay, that's quite interesting. And if I may ask about like on the sales tax before we jump into the next point of discussion, what I would like to know, especially on the sales tax, what you say like because of the increased communication, there was an increase of tax on that side. In essence, who is paying that tax? Is it the person who is communicating, or is it the company who is bearing the tax?
So the incidence of tax is being borne by the consumer. So like I said, it's an indirect tax.
Okay.
But the increased usage of data brought about increase in revenue, right? Because and then what we did prior to the health pandemic, there was a price floor that was set by the regulator. We had a lot of we normally call it aggressive marketing, where the telecommunication companies were giving a lot of free minutes, were freebies to consumers. So as a result, tax revenue was on the decrease.
Okay.
So the regulator set a price floor that anything above the price floor is taxed accordingly. Mm-hmm. So that policy measure came into effect just before the pandemic, just before the president pronounced the state of emergency. So as a result of people staying home, a lot of people were using data, a lot of people were using airtime. So we saw a surge, one, particularly because of the policy measure, and two, because a lot of people stay home and they were just using data. They were on social media and as well as other platforms. Mm-hmm. So as a result of that, we saw a surge in our service tax revenue from the telecommunication sector.
Okay, that's quite interesting. I mean, the government of Liberia is gaining in a lot of ways from this COVID situation because, as you can imagine, most people during the lockdown, most people are working from home, and that meant like there's a lot of either using some sort of online platform for you to be able to work and communicate to each other, and that translated to income for the government. And it's quite amazing that it was quite a coincidence that just before the pandemic, there was a clause set of how much the communication company could give the free data and such kind of thing. Quite a coincidence there. Yeah. Okay, so before we go into the next session where we will be like hearing from each of you on how noticeable are any benefits that the government has given, I'm not sure if Mokaya, you have any question to either Kate or Darlington, or anything that you'd like to know a bit more.
Christine, no thanks. I think I've understood what Kate and Darlington have enumerated with respect to the measures in their respective countries.
Okay.
Mokaya, from my end, the amnesty you talked about, was it as a result of, because I learned from colleagues in Kenya that the multilateral Convention on Mutual Administrative Assistance for the exchange of information was ratified by the Kenyan Parliament, and they were about to issue some amnesty that will ensure that taxpayers that were not paying taxes were given some form of amnesty for a period of time, and before the full implementation of the convention. Is that related to the amnesty?
Thanks, Darlington. Thanks for that question. I doubt it is related to the amnesty. Kenya did sign the multilateral agreement late last year, I think in November 2019. Of course, what the effect is going to have is we're trying to achieve the minimum standards as regards to tax evasion and tax avoidance, especially on what we call tax aggressive measures that have been taken by MNEs. To avoid or to evade tax, or to necessarily, pay less tax as they should, based on the activity and based on the profit they generate from the country. But that said, I think one of the things that the government has committed to is MAPS, the Mutual Agreement Procedures, whose our lessons is try and ensure that where we have bilateral arrangements, and I know we do have a bilateral arrangement with Zambia, is cases are fast tracked and there is no double taxation as far as international trade is concerned. But to just answer your question, I think the tax amnesty, or what we call the voluntary tax disclosure program, the whole idea is to try and ensure that most people are attracted to declare principal taxes which they have not paid for 5 years prior to 1st July 2020, and therefore contribute to the tax basket and get a waiver or remission for penalties and interest. It's going to be very interesting to see how this pans out, because Kenya was running tax amnesty program for income that was derived from out of country and which was not reported in Kenya for a couple of years. That was, I think, 2017 and 2018. The uptake of that amnesty was very low. In any case, where I sit, there was no legislation that was supporting that particular sort of legislation, because effectively what the government was trying to do was telling taxpayers that income earned out of the country then ought to be taxed in Kenya. And from the reading of the act, you really struggle to find a framework that supports such an understanding. So for this one, I think it could have traction on the basis that people are trying to reduce the cash flow impact arising from taxes. So if you comply and you are eligible for the tax amnesty, you get 100% waiver of penalties and interest if you declare and pay the principal in the first year, that is in 2021. If you don't declare and pay the principal taxes in 2021, you have a window of 2 more years, that is 2022 and 2023. However, if you declare in 2022, you are only eligible for 50% remission of penalties and interest. And if you declare in the third year, that is 2023, then you will only be eligible for 25% remission of penalties and interest. So in a nutshell, I think, Darlington, that is what our amnesty looks like.
Okay, all right. Thank you.
Okay. All right. Kate, is there any thoughts you'd like to bounce off Kenya or Liberia?
No, Christine, I'm okay. Thanks.
Okay. So if we could then go next to, let me start with Kate. Is there from like, for instance, what you mentioned, like there a few things you actually mentioned already, like on the input VAT, that there's been quite a bit of relaxation, claiming of input VATs, that a bit more is being allowed to be claimed. But then also, these other measures that have been taken, is there a real benefit, a real felt benefit, either businesses or individuals are getting out of any measures?
Yes, so for the input VAT, definitely some benefit for all industries. And then when we come to medical supplies, this is particularly beneficial for pharmaceutical and medical supply businesses. Because we see zero rating of items such as plastic shields, protective garments, hand sanitizers, and a number of other medical supplies. And then for the reptile hides, so what happened is previously we didn't have a tax on this, and it was recently introduced, and there was a bit of outcry. My understanding is a lot of these producers supply a lot of luxury goods manufacturers. So if you're in that particular business, there's benefit for you. And then going back again to the medical supplies, we also have a very specific suspension and remission on ethyl alcohol, which should be used for manufacture of sanitizers. So as a business, that's particularly good for manufacturers, but for consumers as well. I think we've seen the relief, and myself as well. Initially, when we had the pandemic just start to escalate, the prices of hand sanitizers in the shops were shooting quite ridiculously. You walk in 2 days apart, almost a double of the. For businesses within the specific sectors where there's been suspension of taxes and some form of relief, there's some benefit there. But for individuals in particular, I think the benefit comes around just purchasing of medical supplies and sanitizers. So the manufacturers who import ethyl alcohol have received some relief as well. Subject to certain approvals, they would be able to import the alcohol and manufacture the sanitizers. So that's triggered a direct reduction in prices of sanitizers in the market. We were seeing crazy prices, and now we're still seeing a bit of stability. Beyond that, not so much, because we're not seeing any changes on employee taxes, and we haven't quite seen a reduction on the VAT rate. So as a consumer, you are still bearing the cost.
Yeah. And it's also interesting that you say, especially on the not on the employees, but on the purchasers, like the purchasing power to get basic foods, like without much of any, maybe either VAT reduction on basic foods, or maybe a complete and total exemption or zero rating it. It might still be a problem for someone who has either been laid off to just get basic necessities that they need to food. And
Yeah.
and so, because you mentioned like corporate tax, it would be nice to have it reduced. If you could also speak a bit more about that.
Yeah, so our corporate tax rate currently, the standard one is 35%. Then you see a bit of reduced rates in the mining sector and also farming. But so the companies are still paying the standard corporate tax rates. The amnesty only applies to penalties and interest, and obviously with some specific conditions. So we're seeing a situation where businesses are not seeing a lot of relaxation around how much corporate tax they're paying. They're not seeing a relaxation around the employee taxes as well. And what has also happened, like Kenya, is that we've seen a number of people being laid off. We've also seen salary reductions. We actually got to a situation where the Ministry of Labor had to intervene and start having conversations with employers and introducing conditions for literally laying off employees. So from my perspective, I think a relaxation or reduction on the corporate tax rate, or even an extension of timelines within which to pay, say, the taxes. So I understand from certain countries like the UK, there's some extension in payment where you could have up to 2021 to at least submit payments for the taxes that are due. That would be quite helpful for businesses and also have a trickle-down effect on the ability to retain employees and evidently the purchasing power in the economy.
Okay, that's quite some good thoughts towards what could be done to, like portion the businesses in a real sense, and also maybe employees. And also it's quite interesting because in Liberia, what Darlington actually just said, from what I understand, Darlington, is that you're given a similar kind of extension of payment of taxes. Just what you mentioned, Kate. Darlington had said that there was an extension of the periods for which you remit tax. Darlington,
Yeah.
you could speak a bit more about that, and also what's a real benefit, if there's any, that Liberia is realizing, especially on the relaxed rules. Because it sounds like in Liberia, a majority of what the government has done is to relax the rules of either filing or the payment period, which a taxpayer is supposed to pay. The rules that have been relaxed, are they actually benefiting employees and individuals and businesses in Liberia?
Yeah, so the relaxation did bring some benefits, bring some relief, right? Because the rules were quite strict. When due dates are not adhered to, taxpayers get penalized immediately. So that was automatic, right? And so once the rules were relaxed as a result of taking into effect the health pandemic, businesses, individuals, they did benefit. And so, and also, like I mentioned earlier, penalties and interest on late filing or late payments or failure to file or failure to pay or outstanding tax liabilities or additional assessments that came out of our audit investigation. All those penalties and interests we can't were not imposed. All right. So they were allowed to pay the principal tax amount and the penalties and interest were waived, were not imposed on those late payments, late filings, or outstanding tax liabilities or assessments that came out of the audit investigation. So yes, indeed, taxpayers did benefit, and then like we saw, taxpayers, especially in the large tax segment, they came forward and paid their tax liability. So some were on payment arrangements, some were on installment arrangements.
Okay.
And so as a result of the relaxation, as a result of the waiver of the penalties and interest, they came and pay completely the principal tax amount.
Okay.
All right. So we saw those kind of things, particularly with large taxpayers. They actually took advantage of the fact that the rules were relaxed as a result of the health epidemic, and then penalties and interest were waived.
So if I may ask you a further question to that, Darlington, is then, are there any future measures that Liberia is planning on taking or that you think would be needed to further caution the economy? And also the relaxed rules that have been introduced, does it make sense for them to remain more permanent? Is this a lesson that you can learn and think that maybe relaxing the rules might actually be ultimately the best thing to do for Liberia?
Well, I would say under normal circumstances, the relaxation of the rule will turn the good taxpayer into a bad taxpayer, right? Because there are taxpayer whose behavior are just good in terms of filing and paying the taxes on time. But we relaxed the rule as a result of the health epidemic. So, but once the state of emergency is removed by the government, and then the health situation stabilizes in Liberia and the world at large, those rules will come back to effect. All right, because these are normal tax rules, normal tax procedures that taxpayers should have, should oblige to. So whether it's filing, it's payment, it's registration, or it's accurate declaration, they should just oblige to them. But like I said, the relaxation is as a result of the health situation. So the relaxation is still in effect because the state of emergency is still in effect. We're hoping that by the next 2 3 months down the line, things will improve, and then the relaxation will gradually be lifted. We are not intending to lift the relaxation abruptly, but we intend to do that in a phase approach. Gradually, we lift the relaxation. But all depends on how the economy improves, all depends on how the health situation in Liberia, in the world improves, and all depends on the fact that if the president lifts the state of emergency, then gradually in a phase approach, we will definitely relax, and put back the rules. But for now, they are still relaxed.
Okay, okay, quite understood. If I may go back to Kenya, maybe to just hear a bit more like on the rule side, is there any a similar kind of what Darlington is saying, for instance, like on tax litigation by the Kenya Revenue Authority? Is the Kenya Revenue Authority aggressively pursuing people? From what you understand, Mokaya, is the Kenya Revenue Authority still aggressively pursuing taxpayers to meet deadlines, unlike Liberia? What's the situation like in that sense?
Thanks, Christine, and thanks, Darlington, for those insights. In Kenya, it's pretty more or less the same scenario, but perhaps a different approach. What we have seen in the past couple of months is the Revenue Authority being quite keen on desktop audits, not much of field audits. So, as you might know, Christine, a couple of years back, like 3 4 years, the KRA didn't change their philosophy of approaching or dealing with taxpayers, which was ideally anchored on what we call trust and facilitation to foster compliance. And the essence of this approach was to ensure that there is very little one-on-one interaction with the taxpayers. However, what we have seen is that sort of approach is more or less of changing. There is more field audits. Of course, COVID has disrupted that approach at the moment. What we have seen now is there's what we call value-added tax auto assessments, which basically is the system trying to match what the purchaser and what the seller or the vendor has declared on their iTax platform. That is the platform that KRA is using to for accounting and for declaration of taxes. So there is a really very aggressive approach by the Revenue Authority of trying to ensure that compliance is adhered to across the various sectors of the economy. It's also important to mention that a couple of cases have gone to court, the Tax Appeals Tribunal, even the High Court, and some, of course, are being determined at the arbitration level. That is at the alternative dispute resolution mechanism that KRA has put in place.
Thanks so much, Mokaya, for that. That gives quite an understanding. Seems like maybe Liberia doesn't sound to be as aggressive as pursuing taxpayers as Kenya still is, especially on the VAT automation and automatic assessment of taxpayers. If I may go back to Kate and possibly move a bit away from the technical side of discussion on the tax measures, but to get your opinion on, especially it's likely that the government of Zambia may not collect as much revenue as it would have in previous years. So there's likely to be a deficit in the budget, the government budget. So is there any thoughts that you'd have on a different approach that maybe the government of Zambia should be taking on how it should be raising its revenues for spending in future? Should they be looking for aid and to their partners? And who are like the main trading international partners for Zambia? Is it Europe? Is it China? And any thoughts you have on that?
Thanks, Christine. So definitely, the reduced income from tax revenues will be a big hit for Zambia, and the government relies quite significantly on expenditure arising from taxes. So I would say that one of a few of the things I would have loved to see from the government is to try and sit down and renegotiate the debt arrangements that we have. It has recently announced that it's actually engaged some financial legal advisors to help it manage its debt liabilities. They are also in discussions with the IMF to get policy and technical and financial assistance on how we move forward. To make up for this gap in the budget, we obviously have to take a more targeted approach in trying to encourage local trade and intra-Africa trade. I do know that China, Europe, and also the US are quite partners in trade. And there's also trade across Africa. But I've always held the view that there's definitely more trade to be done within Africa. And even in terms of restrictions, when you see in terms of movement of goods, I think it would be a much easier conversation among African governments to try and agree on how they can still allow trade to continue to flow if we treat each other as priority partners.
I completely agree with you. Like, so much, so strongly do I agree with the view that maybe within Africa there's room for much ease in trade, and even, like trading as if you're within the same kind of sphere and within the same kind of situation, and that your neighbor, and which will help, especially now in this COVID situation where there's not much international trade happening. It could be quite beneficial to have much more trade within Africa, with Africa as being the priority partner. And okay, that's good feedback that you give about that. And if I may also now go maybe to just get Darlington to comment on the same, like, because Liberia seems to be doing quite well, like on the government collection of revenue. It sounds like Liberia is not suffering much on the revenue. But what about like trade within Africa and any deficit that you have? What would your thoughts be on that?
Well, so on the trade side, Liberia is a heavily import-dominated economy, right? We import two major things. We import rice and petroleum products. So our balance of trade is bad. As at the end of 2019, we had a negative balance of trade of almost 300 million US dollars. All right. Our balance of payment is not performing good as well. A majority of our goods are being imported from Asia. So we import 60% of our products from Asia, particularly China. On the export side, we couple of things that we export gold, we export diamond, we export iron ore, we export rubber. But 40% of our export is related to gold. Over the period of 2-3 years running, 40% of our export earnings have come from gold. A majority of our exports are to Europe. About 60% of our exports are done to Europe. So in terms of our economy, like I said, the economy is not performing as it should. All right. Like I just indicated, our balance of trade is in negative. Our balance of payment is in negative. We are import-dominated economy. We export so little in terms of we export almost all raw materials and not semi-finished products. So the government is trying to get into the works of exporting semi-finished products instead of raw materials. Inflation is on the high. The exchange rate, like I indicated prior, is about 29% to that of the US dollars. The country is on a huge inflationary pressure. As a result of that, the government, through the Central Bank of Liberia, has taken some steps to improve monetary policy. We have brought in some international partners, especially the IMF, to help us be more effective where our monetary policy is concerned. So, in the midst of I would say, the gradual performance in terms of revenue collection, but on the overall, the economy is not healthy. The economy is not performing optimally. The economy is not performing as we anticipate. So there are a couple of fiscal measures and monetary measures that the government is initiating or is taking the government is taking some steps to ensure that the economy gradually gets back on its feet. GDP was projected to grow by some 2.9%, but then COVID-19 came and we are being projected negatively. So GDP will grow negatively by some 0.9% as a result of of the pandemic. We're hoping that things will improve. That by the end of 2020 and the beginning of 2021, and the economy and GDP will gradually see growth. But as it is right now, the prognosis for economic growth is negative right now.
That's quite informative, and I think I would like to hear more. Maybe not in this discussion, but a bit more on the trade that Liberia is engaged in, like on the exports and the balance of trade. How you're working around that to have to export more finished products, which is more beneficial than exporting raw material. And maybe we will have a discussion about that in future. But that's quite informative. If I may go towards as we close this, and maybe we'll take a few questions if there'll be anyone who has a question to ask. If I may go to Mokaya, if you could comment on the fact that it looks like tax policies are such a powerful tool that a government has, so that in case of a pandemic or in case of an emergency, it looks like most countries have really gone for tax as the quickest way to provide a relief to the economy. So, being that is the case, what are your thoughts about that? Like, how concerned should a country be on its tax laws, how they are drafted, how they can easily be changed and manipulated? Because the one thing you can attest to is that during this pandemic, what we can confirm is that tax is such a quick tool that you can use to manipulate the economy. So, what are any thoughts that you might have on that?
For sure, tax is one of the most immediate measures that most countries across the globe can take to mitigate a scenario which is ravaging its citizens. And of course, it's especially so where the economy is one which is consumption based. And if you twist the consumption taxes a bit, then the impact will be felt depending on which direction the twist has taken. Interestingly, in Kenya, having been in the profession for 8 years, slightly more than 8 years, I'm yet to see our tax policy. The government, or in particular KRA, does confirm that we have a tax policy in place. I've never had I've not yet cited it. I won't really comment on what our tax policy looks like. But for sure, we do need, and we as taxpayers need to have familiarity with the tax policy, because it's then when we are able to advise investors, potential investors, both local and foreign, on trajectory does our tax space take, that is current and in the future. In the absence of that, then it really becomes extremely difficult to make long-term investments, especially for investors. And yet, the tax regime or the tax environment keeps on changing. Mm-hmm. For example, in the country, we have seen a couple of tax changes, some of which are quite detrimental to investment. I'll give you a case in point: is capital allowances. Our capital allowance regime was overhauled recently, that is by the Tax Laws Amendment Act 2020. Essentially, anyone who had relied on the previous capital allowance regime to make investment will be taken aback, because the change is quite material, or is very material to be precise. And so are other changes which have come. For example, going forward, the importation of plant and machinery will now be subject to VAT. So effectively, this has a cash flow impact, because plant and machinery can be quite expensive. So adding 14% to plant and machinery, it has a cash flow impact at the point of investment, considering the cash outlay required to put up some of the capital intensive projects. So, and some of these changes, most of them were never anticipated. So I think we need a tax regime, we need a tax policy. The tax policy needs to be a public document, in my view, because we taxpayers do contribute to the tax revenue of the country. And this will inform investment both from a local perspective and from a foreign perspective, on which areas the government is quite keen to spur, and what sort of incentives then are provided for in the tax policy in those selected areas which the government is keen to develop. Important to say as well is what we have seen in the past two legislations that have amended the tax law is incentives. Tax incentives have been slashed quite significantly. And again, where else it's quite important to not to erode the tax base, which will mean that there's less tax revenue collected. This also needs to be done in a much more orderly manner, in a manner that is welcomed by the public, by the investors, and that is not the case we are seeing at least in Kenya. So whereas taxes are quite easy to change, and therefore pass an impact to the economy, I think we need a more stable tax regime. We need a more stable tax environment, which will then have an impact to the economy in terms of development and in terms of growth.
Okay, thanks, Mokaya, and I completely agree with what you're saying. It's quite amazing that in the midst of this COVID pandemic, what has happened in Kenya is a case in point where the measures that are being passed on one hand are said to help in the pandemic, and that's the reason a law is being passed. But then in the process, the entire capital allowance and capital incentives are overhauled in the process of doing that. It's quite amazing how much hand the government can swing and completely affect businesses to the taxes that they impose, or the taxes that any significant change in the law, which Kenya is a case in point. So, Kate, if I may ask a last question to you, Kate, is this the same kind of scenario that you have in Zambia? Is the government of Zambia, can you compare with, for instance, if I may go and directly and ask, how quick was the government in passing the law, like for instance, to pass on the input VAT, on the import of lubricants and such kinds of things? Is it easy to just manipulate the tax laws as it is in Kenya, or what's the situation like in Zambia?
Well, I would say we're a bit in between. Mm-hmm. So we probably started seeing real information and probably activity around COVID-19 in March. And we received an address towards the end. So in April, that is when these legal changes were announced in terms of tax law. I think there's flexibility for the government to respond. For instance, with respect to the COVID amnesty, quote unquote, that was passed through guidelines. But I think it's the consultation process that tends to take a bit of time. So that one we saw come up quite early. But for the VAT and also just responding to specific sectors, that did take a bit of time. But I'll probably say it's got a lot more to do with consultation and decision making.
Okay, that's quite different, maybe a bit. Even if in Kenya, for instance, there will be public participation as well, which Mukaya could confirm. But in this case, like from what he said, is that there was quite many changes that were passed, changing tax laws as they were passing laws to do with COVID. So if there's anyone who is maybe listening to this and might have a question, if you could ask it. I will assume there's no one who has a question. Darlington, if you may give us any final thoughts that you have on like the entire landscape of Liberia and tax in Liberia, and also it would be interesting to hear your comment, especially about the changes, the quick change in tax laws that we've seen is such an easy tool to manipulate by the government of any country. What is your thought on that? And also give any final remarks that you might have.
I was listening to the BBC yesterday, and I heard a group of millionaires were calling, or according to government around the world, to increase wealth tax as a way to stimulate the economy around the world. And I thought it was quite interesting. Quite interesting in the sense that the wealthy are now calling to be taxed more in order to see how income can be redistributed, across the spectrum of the economy. I strongly believe that tax policy can be used as a very good vehicle, very good tool to help to stimulate the economy. But it depends on the policy mix of a particular country. Because, like taxes are neither driven by politics, by the economy, and by the particular geographic, right? The particular geographic the country finds itself in. So it depends on the politics, it depends on the economy of the country, and it depends, like I said, on a good policy mix that will help to drive and stimulate the economy. So yeah, in Liberia, there are a couple of things that we have proposed to our national legislature, because for our fiscal year that had just begun, our government has just introduced the budget, the national fiscal purse, to the national legislature, and in that we have proposed through our Ministry of Finance and Development Planning imposition of excise tax on petroleum products. So for every pump price of petroleum, there's an imposition, or there's a policy preposition in the budget that there should be an 11% imposition to every pump price of petroleum products. I know civil society will come fighting because they would think that the tax burden would be too high on the ordinary consumer. But we work along the Ministry of Finance. That could be reduced, but we thought that could be a good policy measure. Put more money into the national purse, that government will have the opportunity to spend more on its social program and help to better the lives of the citizens. Other thing we have been thinking on is also to increase the GST rate by 1%. Now it's about 10%. The thought is the policy measure, and we are saying that it should be increased to 11% to see how we can also stimulate the economy. Another measure we are told just before the health epidemic came into picture is we converted from ad valorem rate where excise tax is concerned to specific. We have seen a slight increase in excise tax revenue in that context, and the projection is that there will be an increase in revenue from that tax hit. So I agree. the good policy measure, good tax policy measure, or good mix, depending on the economy, depending on the politics of a particular country, could serve as a good driver, very critical driver in resuscitating an ailing economy. So I agree. Tax policy measure can be a good driver, can be a very good vehicle to push the economy forward, depending on how we structure it. Another thing we are doing is that what we call, because there are some government ministries that are generating revenue. Liberia operates a maritime program in which we run what we call the flag of convenience. Liberia is the.
Thanks, Darlington, for that. We will definitely have a further discussion on this, especially on your maritime side and the shipping side, considering that Liberia is such a big revenue and a big port that you can make a lot of structural changes on that. But thank you for your thoughts on that. So Mokaya, if you could also give like your concluding remarks and any thoughts that you may have on Kenya and Kenya tax.
Thanks, Christine, and thanks, Darlington, for that comprehensive overview. I think for me, it's a request to Kenya and, of course, governments across Africa to revise their budgets, their budget estimates. Kenya, we are targeting, our budget estimate is 2.7 trillion Kenya shillings. I don't think that target is likely to be met by KRA. KRA's target is 1.6 trillion Kenya shillings, which means already we are supposed to get around 800 billion in debt. Already with the things like education off the budget, because our school curriculum, especially for primary and secondary, has been suspended until next year. Education sector was allocated around 500 billion Kenya shillings. So with such kind of things off the budget, I expect that the government needs to be extremely prudent, reduce its budget to what is something that we can manage to raise it from a depressed economy, cut all the unnecessary expenditure, which this will ensure that KRA does not have pressure to collect revenue from an economy that is depressed and that is shrinking every day. Number two, I think the governments across Africa need to do more to empower its people. This is a time for reflection. We have seen until a month ago or so when we had a few companies manufacturing PPE necessities or COVID-19 necessities. So if they can be a very focused approach to spurring our manufacturing sector, ensuring that we can be able to procure as much as possible from Africa, because COVID-19, what it did is it did distort all international supply chain avenues. And the impact of that is we couldn't even manufacture very best stuff, because for us to manufacture such stuff, we have to import inputs from other countries. So to the extent that Africa can rely on Africa to supply necessities for Africa, I think the better. And for me, that is the Africa I am looking forward to.
Okay, thanks so much, Mokaya, for that. Those are very good thoughts. I could go on and say a lot, especially about the Kenya budget and the cutting in spending. And also, I completely echo every word that you've said, especially about Africa and what we can learn and do on this. Like, so much that Africa could do for itself if we were just a bit more inward looking and looking for solutions. Kate, if you could give us your closing remarks.
Okay, thanks, Christine, and thanks to everyone. I've learned quite a lot and some really good insights on what's happening. So I would just say that I think my closing remarks would be that it would be good to see tax authorities across Africa, if this isn't happening already, to sit down and discuss and share strategies and see how we move forward in terms of measures for the COVID pandemic, because it looks like this whole year we might be dealing with a very different kind of normal, but also beyond that for next year's budgets, trying to manage the revenue expectations that we are relying in terms of taxes, and also identifying sectors that can help us move forward. I definitely concur with Mokaya that our manufacturing sectors can do a lot for us. we would have been in a better position if we're able to manufacture PPEs and also just grow a lot of our own food and not rely on a lot of import externally. So I would just end on that bit. Thanks.
Thanks, Kate. Thank you so much, everyone. I thank you, Kate, Mokaya, and Darlington for being the panelists and for accepting to do this, and for everyone else who has been listening in. And the other thing I would like to mention is that what we are trying also to do at Africa iShare for the idea sharing, something that we are trying to do which would be of interest for you tax practitioners is to have a sort of like a think tank, not just a think tank, but like a collective community of tax practitioners from different African countries. And that will help also as you're maybe advising or as you're working in your different areas that you can reach out to a person from each different country, which may not be so easy to do right now. So we will be reaching out and trying to like have this community of tax practitioners from at least every African country and more than one practitioner actually, so that there can be a pool of idea sharing and also reaching out to network and have you grow your practice as well. Thank you so much for everyone who has joined in, and we will do this again. We'll possibly be having a further discussion, especially on digital taxation, which seems to be an area of quite great interest for African governments. But I will end it at that and say thank you very much to everyone.
Thanks, Christine, and thanks everyone. It was an insightful session.
Thank you.